Sign up to Bityard today, deposit $100 to qualify for the wallet token airdrop. Hello everybody, welcome back. Let's have a look at Bitcoin and the Dixie, and that's about it really. There's no point in going around any further. So exactly as predicted, we had a bit of a pump yesterday, and that wasn't anything specifically to do with the chart. That was to do with history repeating itself. We saw the same thing in March when the FOMC meeting took place and they decided they were going to go for a 0.25 basis point. They went for 0.5% this time. They spent 2 days talking about it and they came out with that, which is, I don't know what they talk about for 2 days. We all knew that was going to happen. We all knew it, but yeah, it took them 2 days to make that decision. And guess what? The markets had already priced that in, haven't they? There you go. We've priced that in, don't worry. And so as a result of that, so long as it wasn't any higher than that, which is what the markets weren't expecting, we had a pump. It wasn't just Bitcoin, it was all markets pumped as a result of that. And obviously on top of that, the Dixie came down a little bit, which is again exactly as predicted. So I'm not here to blow my own trumpet. Let's just try and dissect the chart on the short term. At the moment, we are above the centre of this Bollinger Band on the daily, trying to gain support on it, which comes in at around 39,500. If we can hold that, that's okay, and I would imagine that we will basically trend upwards towards through the weekend, maybe into next week, and so on. So we had a decent reaction from this this kind of event in March, and we traded higher for about 2 weeks, and from the bottom to the top it was more or less a 30% move, 28% move, so we might be looking at something similar to that. Excuse me. I'm not looking for these highs to be tagged. We would really want to see us closing above the 200 exponential on the daily. Again, this is just a daily term time frame. For many of you, that's a long-term time frame, and for me, it's pretty standard. But if we go to different time frames, we see different types of reads. Now, unfortunately, if we start from the monthly, it doesn't look very good at all. In fact, it looks pretty awful. It's so bad that it's not even showing me the chart. But basically, if you view this on the monthly, it tells a different story. It shouldn't really concern you too much. This is an up only chart, despite what other people might say. It is up only, but it's not up at the moment. So it's up only, but it's not up currently, if that makes sense. And that's fine. You'll get this. And if you want to take part in a market or an asset that is up only, the only thing you need to worry about is time. To be honest with you, time in the market is better than timing the market. So at the moment, yeah, we're coming down to this level once again. The 37,000 is a bit of an intermediate area really for support. It's not super strong, which is, I've bought this zone out. I bought 40,600. I bought 35,000, and the next area for me is going to be 31,000 basically. And it's not that that's a specific target. I just want to front run the summer lows, which are down here at 28, 29. So, you're buying into a zone. I'm selling. I sold up at the high, well, not the all-time high, but sold around 54 and then buying back lower. I don't have a job. This is actually my job, surprisingly. So, it's not like I've got alternative sources of income to dollar cost average. It's all for me to basically do in trading. That's how I make my living. So, I have to sell high in order to buy low. And so, yeah, I buy the zones. I don't continuously buy the same zone out. I couldn't buy this zone out any further. It's already been bought. The next zone would be lower, and then lower again, and lower again. Again, it's an up-only chart. The only component you've got to worry about here is time. So unlike Matt Damon, who bought the top, he will be forgiven at some point. But at the moment, Matt Damon and his friends are obviously wishing that they had waited a little time. So if you were Matt Damon, you would love to be in a situation like us, where you've got capital available and you've bought this zone, and Matt Damon will be kicking himself that he didn't, and having buy orders down here and back into the mid-20s as well, which it's not unlikely that we come down to those levels. We have to consider that is possible, but Matt Damon would love all of that, but unfortunately he's going to have to wait a little longer to have his entry point in profit, but that's fine. It is an up-only chart. I know people get upset by that, but it's true. It is up-only. It's not the only up-only chart. There's many charts out there in the world that are up-only. And if you want to take part in those markets, you have to just buy. And so where better to buy on consolidations, pullbacks, or whatever you want to call it, lower prices effectively. So yeah, we are looking at a negative cross here. We are looking at descending volume. We are looking at momentum leaving consistently, which does favour further downside. But the daily, again, in the very short term, we could hold this area and continue up. And I would say that the overall top target would be into this kind of zone between 44 and 45,000. I'm not sold. I'm not married on that. Again, short-term time frames are kind of neither here nor there. Now the daily is, like I say, it was looking okay. The 4 hour is sort of catching a bounce on the 7 simple, so you might have a little bit of another continued rally from this particular level, so just below 39,000. So again, at that major support that we've got on the moving averages, so your Bollinger Band center on the daily, and obviously your 7 simple on the 4 hourly, and this could push us up to, in the short term, 41,000. So we're looking at, I suppose, the very short term targets of around 41,000, maybe between today and tomorrow. And maybe a little bit longer than that over the next few weeks to maybe 44 to 45. That's if we can hold 39,500. Remember, that is a big problem. If we break down from there, we'll just go back down to 37 and then maybe lower after that. And hopefully my next buy order gets filled. Like I say, up only, guys. The only thing is time. So that's the only issue that you've got to deal with is time. So that's your short term, that's your long term, and the only other thing we need to really entertain is the idea that the Dixie is going to, how far is this going to consolidate? So we reached our peak over here. We did think that is a very obvious place for it to peak because we've peaked over there in the past. 1, peaked in this box over here, 2, pre-pandemic levels, and then back up to reach this high. Now I don't think we're going to stop here this year. Last year, like I said on that video, I had to pull it out the bag. Last year I did predict a bullish year for the Dixie, and what do we got here? Exactly as expected. Oh my god, I'm on an absolute roll here. Long-term time frames are always the better ways to trade, to be honest with you, and they give the clearest reads. And so yeah, we're getting that. And I think that our peak for the Dixie is going to be at about 106, 107 potentially. Do we consolidate from this level? I think it's likely that we do, although I am also not sold to that because you can't fight the Fed, and the Fed basically fought back yesterday. We're going to get inflation figures, I believe, next week. It'll be too early to really see if anything that took place yesterday is going to have a direct impact on that. I would expect, to be honest with you, I would expect with all the things that are going on in Russia, Ukraine, and all of the other things that are going on in China, and everything that's going on in our economy, generally speaking, I would imagine that inflation is either exactly the same or a little bit higher still. It'll take a little bit of time for these rate hikes to filter through, and despite what you and other people might think, half a percent rate hike is not enormous. I know historically it's bigger than normal, but it's not massive. Do you know what I mean? It's not huge, and so these sort of things will take a little bit of time to settle in to bring inflation down. And if it was just about repaying all the stuff that took place throughout the pandemic, that's fine. But because we've got other things at play as well, it just makes it even harder. It's a very very delicate situation being I suppose the person who decides monetary policy at the moment, because you can't crash the markets, that's not an option, but you do have to bring inflation down, but then you've got all these other things on top of our own issues that are making it worse and worse and worse. So when it comes to the chart, we can just turn on some of these indicators and have a little look at the daily, see what the daily suggests. Alright, I think that it's likely that we do continue with this consolidation down to maybe just above 100 to start with, so 101 to 100, and then sort of consolidate further back down to 100. Now, at best, we'd be looking for about 97, and this would be over a period of between now end of summer. So I'm not saying that we go straight down. It's not a down only chart, it's not an up only chart. You're fighting the Fed on this one. So the Fed they've done their interest rates yesterday, haven't they? And that should have a positive effect on the Dixie. But this is a counterintuitive market, isn't it? And as we see, they did the rate hike and it dumped. So again, counterintuitive stuff. So it's not. It's exactly that. It's counterintuitive, isn't it? And we recognise that, we know that, we understand that, and actually we take advantage of that. But yeah, this is likely to continue to go up at some point and reach a peak, I would imagine, between 106 and 107. But I would be looking for a consolidation now. So if we can start breaking down below these levels, that's where we'd go. But initially, I think a consolidation from that peak is required. It might just be a timid one that actually gets picked up around the 20 or the 21, like it has done in the past. You know, bang, all the way back up, bang, all the way back up. But a peak overall at some point this year, at around about 106 is where I believe it's likely to peak at. And that would probably coincide with inflation figures coming down. As soon as we start to see those inflation figures coming down, we will see the Dixie come down also. Again, counterintuitive stuff, but that's when confidence will regain them. Come back into the market. Investors will come back in a little harder and heavier when inflation figures start to be a bit better. But at the moment they're not, and I don't expect that this month we will see anything special when it comes to inflation figures. If anything, it'll be either the same or a little bit higher. It'll take a little bit longer throughout the year for those inflation figures to really settle in and start to come down. Right, so that's all we've got to go for, really. Keep your eyes on the prize, 39,500 line in the sand, breaking down from there, especially on a daily. Expect back down to 37, and obviously we still have the short signals on the daily that we're waiting to see. But outside of that, if we can hold this level and beyond, we'll be moving back up into the 40s, just the lower 40s to begin with, and maybe a bit higher next week. Again, it's very early days. This wasn't a TA based pump. This was a pump generated from, well, yeah, your FOMC meeting is stupid. I know it's stupid, but it's true, and that's why we talk about these things sometimes. Anyway, I'll leave it with you there. But thank you for watching. Hope you have a nice day, and take it easy.